Welcome to today's episode of Creative Real Estate. I am your host, Dustin Zeller. We talk everything creative real estate here in Utah. And today I'm excited to welcome special guest Michael Gleed with me. Michael is a lender. He's been in the mortgage industry for north of a decade. And really why I wanted to bring Mike in is this guy does creative stuff on the lending side. So Mike, how you doing?
Hey, thanks for having me. I really appreciate it. I love talking about things like this. I love talking about creativity, and I have a passion for what it is we do, and that's helping people into homes, right, at an affordable payment. And, I've done all kinds of loans over my 10-year, 12-year career, and you know what? This is actually one of the most exciting times for me in my life right now.
Yeah, real estate's totally different right now, isn't it?
Yeah.
And hence the fact that we're here, we're talking about creativity. And it's kind of interesting, the shift that has happened in real estate right now. When interest rates were 3%, as a lender, you didn't have to get too creative.
Right.
Ultimately, the creativity that existed then was taking somebody that's struggling to qualify and simply helping them qualify.
Right.
Today, it's just helping anybody qualify. Interest rates are so high, it's hard to qualify for a home. Either you don't want to because interest rates are so horrible and you share what their monthly payment's going to be with them, and they have that shock and awe, "Are you kidding me?" face.
Right. Yeah.
Or their debt to income ratio is now so far out of whack
Right.
because
right.
the payment's so high.
Right.
And so, how do you get creative in today's market?
So let me tell you, I hit my head against the wall for a long time now, trying to figure out how to be creative as a mortgage broker in this market. And let me tell you, it's really hard, okay? And so that's why I'm transitioning to creative real estate, because it gets more people into homes than mortgages ever did, right? And that's just because you're just utilizing a super low interest rate mortgage to the benefit of both the seller and the buyer.
Let's talk about that, because that's a little bit about what we're going to break down today. Most agents, most lenders are, let's just kind of define it, struggling, trying to figure out where their next paycheck's going to come from. And they're ultimately worried about where's the next commission coming from. I mean, if I have all these buyers lining up and nobody wants to buy, interest rates are, stink. What's the common phrase you hear right now? I'm going to wait for rates to come down.
Wait for that until, next year, but then it's been a year. Rates haven't come back down. They've gone up.
I know a bunch of people that a year ago were saying just that. Like, in a year from now, rates are going to come back down. And as a matter of fact, they've gone nowhere but up in the last year.
Right.
And so I don't want to put my eggs in that basket. I don't want my clients to put their eggs in that basket. What I'm finding in this market right now is there are opportunities to negotiate really good deals on houses. But if I've got to go swallow a 7% interest rate, I don't really want to take that opportunity. It's not that great.
Right.
And so we want to talk creative today. And one of the topics we want to talk about is the assumptions. What is, from a lender perspective, how would you define an assumable loan? What does that look like?
An assumable loan is essentially a loan in which you can sell your home that you own currently to a buyer. They take over your underlying mortgage. It goes onto their credit, comes off yours. They get that super low interest rate, and you get to move on into the next house.
So you mean to tell me, if I bought a house back in 2019, 2020, I went out and got a 3% interest rate, and I now owe $400,000 on my house. And I want to list and sell my property and get rid of this thing. Maybe I'm moving out of state. Maybe I'm moving into mom and dad's. Maybe I'm moving up in the world and I want to go buy a new house. I've outgrown this one.
Right.
It's time to move. And you're telling me that somebody could come in and take my position over. Let's say the house is worth $600,000. I owe $400,000. If somebody comes in and gives me $200,000 from a down payment, they can just take my loan over.
Right. But that's just such a very, one-dimensional way to go about it. And that's how everybody's doing it right now with the assumptions is they're just, we owe $400,000. You give us $200,000, then bada bing, bada boom. But here's the thing is people don't have $200,000 they're going to put down on a $600,000 home. You know what I mean?
Some might, but
Some might, yeah.
Very few.
If they're selling their other house and putting that equity into this home, most likely.
It could be a great option.
Yeah.
So what you just said is actually what I'm seeing in the market right now. There are agents and sellers offering assumptions on homes, but they tend to have a lot of equity and they run into a lot of roadblocks. So let's talk about those roadblocks. First of all, does somebody need to qualify for this? What does the qualification look like?
Just like you would qualify for an FHA loan normally, you go into the mortgage broker, you give them all your stuff, you answer all those questions, and then I make this joke where you give them a vial of your blood, you know what I mean? It feels like that sometimes, but the thing about it is with assumptions, it's the same process, except now you're qualifying with the lender or the mortgage person or the mortgage company that currently holds the note, the mortgage note.
So if my loan currently, and again, pretending I'm the seller here, and this house is worth $600,000, I'm selling it for $400,000. What the point that I want to make here for any individuals tuning into this is that if you are one of those individuals who have an assumable loan, and let's define what those loans are. It's pretty much every VA and FHA loan on the planet.
Some conventional if they're older than 2009 and variable, but that's just...
Yeah, so pretty much next to
no
conventional. But, for the most part, we're talking FHA and VA loans, and that's a very popular loan. VA maybe not as much because you've got to be a veteran to get a VA loan, and VA loans are amazing, no mortgage insurance premium, really good interest rates. And we've been dabbling on those in the last little bit, finding guys that have interest rates at 2.5%. That's very sellable and very appealing. In the right hands of an agent that has experience in this, with not just marketing it, but figuring out how to get it from point A to point B to actually get assumed, is a huge tool. And if you're not marketing that, you are missing out like crazy. If you are currently trying to sell your home and you have an FHA or a VA loan, and let's use the same exact example, it's a bloodbath of a market out there right now. Listing prices are dropping and dropping and dropping. Concessions are being offered. If you've got a semi-creative agent, maybe they're offering this $600,000 house, which is now probably down to $575,000, but they're also offering $20,000 in closing cost concessions, saying, "Hey, we'll give you extra money so you can temporarily buy down your loan, and then when rates get better in the future, you can refinance." Again, you're gambling with that. You're saying rates are going to come down. I don't want to bank on that.
Bet it all on black, right?
Yeah, we're going to the roulette wheel and saying they are for sure coming down. Let's bet on it. But now, if your message was, "Tell you what, guys, I've got this super amazing interest rate. Let me market the rate. Let me market the 3%." Does that not make your home potentially more valuable?
Oh, for sure.
I guarantee it. I've been doing
next level valuable.
I've been dabbling in this, and so as an agent, I can go out and get you like 610, not 575, and bloodbath of another $20,000 out of your pocket.
And be on the market for 90 days.
Yeah,
that's not what you want.
Yeah. Now, an assumption is an amazing tool. The buyer must qualify, and so you limit yourself to buyers that can't qualify. A lot of people watching this might not understand this aspect, but I work with people all the time with creativity that can't qualify but still have $200,000 down. How would it be to be able to market to those people as well? So we'll talk about that, but we'll also talk about trying to fish in the bigger pond. If I'm fishing for a buyer and I'm selling a property, do I want to fish in the little pond with few fish, or do I want to fish in the big pond with all the fish? I want all the fish.
All the fish.
I want all the fish. I do not want 1 or 2 people being interested in my house. I want 10 or 20 or 30 or 40. I want a lot of people interested in my house. And so ultimately marketing with an assumption is key. But there's other similar type of contracts like an assumption that we'll dive deep into more on our next episode. That'll actually break down some stuff that kind of blow people's minds. Which basically says, what if you had somebody on the same deal that we're talking about, $600,000, $400,000 loan, low interest rate of 3%. What if somebody came in and said, "Man, I really want this, but I only have 100 or 120,000 down, and this other 100 or 80,000 down, I'm missing that amount." Mike, is there something we could do so I could buy your house?
Yes.
There definitely is. Now, you want to negotiate that right. You want to come out creating a win-win situation for that individual, but that could allow you to potentially sell your house with lightning speed. If you just go vanilla assumption, like most every agent's doing on the planet that's offering an assumption right now, you're chasing 200,000 down. You're chasing a well-qualified buyer that's going to have good credit scores, good income, DTI, debt to income
Mhm.
ratios, all that fun stuff. But you're also going to be working with somebody that is going to take some time to do this, because it's not just finding a buyer. Finding
Right.
a buyer is not super hard.
Mhm.
But then finding that buyer and working with the underlying mortgage. Let's say in this scenario, the underlying mortgage was with PennyMac Home Loans.
Right.
As the listing agent and the seller, we now have to communicate with PennyMac that, hey, I'm doing an assumption. Please send me an assumption packet.
And they go through the assumption department. And let me tell you, what happens in these departments, there's like 2 people, right? And they've got hundreds of applications they're dealing with. Because the lenders don't want to be giving people more of these 3% rates. They want to be giving people 7.5% interest rate, right?
Well, and let's break it down. If we do an assumption, if PennyMac does an assumption for my client in this situation,
Do they make any more money?
no, they don't get paid a dime. Matter of fact, closing costs are super, super cheap. Guys, I'm not talking 10, 20 grand, I'm talking like $500. In
Right.
some cases less. And ultimately, this person comes in and takes over the seller's position. The seller is literally released from this contract.
Mhm.
On a VA mortgage, does a VA borrower have to be who assumes this, or can a non-veteran assume the loan?
A non-veteran can be.
Yeah,
one that
a
assumes it, yes.
non-veteran can assume a loan. I've
Right.
got a nephew right now with a 1.75% VA loan, and if he ever sold it, I technically could go and assume it. Now I'd have to live there,
Right. Primary residence. yeah.
primary residence, I'd have to qualify, I'd have to do all that fun stuff. But there's one tricky thing with it. The VA eligibility that this veteran has, when he goes to buy another property, VA, that will actually limit his eligibility a little bit. And he'll get some of it back as he goes, he or she
Right.
goes. But ultimately, they can be free from that loan, in essence, as far as liability,
Mhm.
and go buy another house conventionally or with an FHA mortgage.
Or creatively, right?
Or creatively.
Yeah.
And we'll get into that a little bit more
Yeah,
tomorrow,
yeah.
and maybe even this today, because right now, we got a lot of sellers that they feel stuck.
Oh, yeah.
They want to upgrade,
Right.
but they feel stuck because why sell my house in a bloodbath when I have to give it
Mhm.
away? And then why go buy a house at some super high interest rate?
Right.
Could we not do an assumption and then help you find an assumption?
Right. But
Easy.
then, this is what probably people are listening that have had an experience already listing their home. And if they've tried to do an assumption, chances are they got 6 weeks into it, and the buyer's calling the lender every day, hey, what's the status of my application? Nobody's calling them back. Everybody's saying that they got to talk to somebody else, And what happens 6 weeks later is they get an answer, and it's not no, but it's we haven't done anything, basically, And so what do you as a seller do? You think, I'm done. This
Yeah.
is stupid,
Let's
right?
just sell this
Assumptions
traditional-
is not good. And so if you think that creative real estate is assumptions, you're way off, okay?
It's not.
That is not creative real estate, right? That is just a fine, small part of it, right?
It's a teeny bit of creative real estate.
Yeah,
I do love assumptions. There's a time and there's a place for them. And if you're going to do them, my biggest recommendation is that you hire the experts
right.
that know how to do it, that's actually going to make it
Mhm.
pain-free and not a ridiculous situation.
Right,
With me and my team, we have experience doing
Right,
assumptions.
right.
We use a title company that has experience with
Right.
assumptions. And in most cases, we'll actually hire a processor who assists in, they've been there, they've done this.
Right.
They know how to talk to
Yeah.
the banks, they know how to grease the wheels, they know how to get the ball rolling, get the person
Right.
assigned to the file. And instead of taking 4 or 5 or 6 months, maybe it's 4 or 5 or 6 weeks.
right,
And now we can have a very appropriate time frame to make everything fly.
right. And it's all about having the right people on your team doing the things for you. Because if you don't have that, if you don't have everybody, all the pieces in their place, right? All the right team members doing what they need to do. Somebody helping you with the assumptions, somebody helping you with, the selling and the buying, and you can wrap it all up into this nice, pretty package. It's pretty amazing. Yeah.
No, I totally agree. We've had some great success with assumptions. Honestly, in a lot of our deals that we've done with our clients. We get in, we talk about assumptions, the seller will get a little bit frustrated with the process. We typically shift gears to a better deal for the buyer and the seller.
Right.
And we actually come up with a better deal that everybody's happy with, that doesn't have all of these restrictions, and makes things move very easy, fast, easy, and just makes really a win-win situation. And I'll just give you a little bit of an example here. Again, let's use the same example we've been using, a $600,000 sales price, $400,000 loan amount at 3%. But again, you're fishing in the pond for people with $200,000 down. You find somebody that I would define as a very strong buyer that has 20% or 15% down, something that's really hard to walk away from if the going gets tough. And they put that money down with you, and imagine if you didn't have to give them your amazing interest rate of 3%, but imagine if you gave them an interest rate of 4 or 4.5, something that they're still very happy with, but now it fits for both parties. You can actually create some easy cash flow on that property to then assist you on buying that next property.
Right.
And could we help you buy that next property creatively and get an amazing interest rate on that property?
Sure thing.
To where you upgraded, you got the nicer house that you've had your eyes on,
Right.
and yet your net payment out of pocket potentially could be less.
Right. Right.
That's some pretty mind-blowing stuff.
Right.
Everybody's swallowing the bitter pill right now, which is, if I want to upgrade, it's not like it was a couple of years ago. If I want to upgrade, my monthly payment's going to be a few $100 more.
Yeah.
No, if you upgrade right now, your monthly payment, when you're ditching the 3%, you're picking up the 7-point-something%. It's going to be double.
100%. Yeah. 100% more, double more. Yeah.
It's so bad that people are like, yeah, we're not moving right now.
Yeah.
We'll wait. We'll wait for the interest rates to come
Right,
back down.
right.
Well, what happens if you wait till the interest rates come back down? Everybody else is waiting.
Right, and then there's more. Yeah, it's a cycle. This is the cycle we're in. But if we can make this, the point where we're at in the cycle to our advantage, right?
Oh, 100%. And the beautiful thing about it is that we're taking a seller that's sick and tired of the situation and resolving their situation, creating a win-win scenario. But if they really looked at the internal side of where we're coming from when we're representing a buyer in this situation, our buyer is knocking it out of the park. They're getting the grand slam.
Right.
But what's fun in this scenario is that we're still helping the seller hit a double. We're actually still doing something better from the seller than if they just worked with a traditional buyer who got their traditional financing,
Right.
who by the time they go sit down with their lender and they're like, oh my goodness, my monthly payment's going to be $4,800 a month. I can't do this. Let me inform the seller that we're going to back out of this transaction, even though we've already done our due diligence and all this other stuff. But I looked at my monthly payment, and it's a lot more than we thought it was going to be. And then all of a sudden it's, okay, well, what can we work out? Well, Mr. Seller, will you pitch in like another 20 grand in closing costs so I can do this crazy 2-1 buy down and prepay some interest, and now I can get a more affordable monthly payment, and now we can do it. Yeah, you can do that, but you just beat the daylights out of the seller. We can come in and create the win-win scenario, still get our buyers in a phenomenal deal,
Right.
without beating the sellers up like crazy.
Yeah.
We're actually helping both parties. I love it.
I love it too. It's amazing when you see it in action too. When you take a family that thought that they would never, or basically that they wouldn't be able to buy a home for years, whenever the rates came back down, and now they're buying the house that they like and they want, and it has all the features they want. It's got that little bit bigger backyard, that extra bedroom, that RV parking, and it's not costing them double what they're paying now, right? It's just like they used to be, when rates were always super low, right? And so when you moved up a little bit, it makes a difference in your payment, maybe 25, 30, 40%, right? Maybe, right? People can absorb that. They're okay with that. And if you're listening to this right now, you can have that, okay? This is not some fairy tale. This is real, okay? You just have to be willing to sift through all of the junk, okay? And just listen to the experts on this, okay? Because there's a lot of people out there talking about creative real estate, and let me tell you, what we're doing here is very creative, and I challenge you to basically give it a try, you know?
Yeah, and with our next episode that we've talked about, we're gonna be talking less about assumptions. We're gonna be talking more about seller financing,
Right.
defining what that means, explaining different types of seller financing. Can you do it? Can you do it if there's an underlying mortgage? There's a lot of myths out there. Matter of fact, you can go to Google and look up seller financing
Yeah.
and get your pants scared off of you right
Right,
now.
right.
That's where the horror stories make it, is to Google, right? All
Right.
the bad scenarios make it there. And so we've been specializing in this topic I have for well over a decade, and done hundreds of these transactions. And so it's amazing what you can do with it, but you have to do it right. There's
Right.
pitfalls along the way. You don't want to go reinvent the wheel with a seller financing transaction. And you even don't even want to go tie your trailer or tie your boat, whatever the phrase is, hitch your
horse.
wagon
Yeah.
to somebody that's maybe dabbled in it once or twice.
Right.
I really recommend, jumping on with an expert, somebody that has done it a bunch. Even when I first started doing these, I dabbled in 2008. I did one pretty much accidentally. It just jumped up and slapped me in the face.
Mm-hmm.
And then 2011 is when I really learned about this stuff. And I would say my first 10 to 20 deals, luckily, I had a mentor that was amazing and made me look good.
Yeah.
I was excited about it, but I couldn't answer all the questions. I didn't know all the pitfalls. I kind of knew some of it, but I didn't know it all. And so I was able to rely on a mentor until I learned the ins and outs and all the pitfalls and the gotchas. And now I've been on pretty much every side of these conversations and contracts, as you can imagine. And it's amazing when a seller comes to me, they have those same questions. They want to make sure they're safe. But when they have somebody that confidently walks them through that, it's amazing how a lot of sellers are all of a sudden like, this is a no-brainer. Like, why isn't everybody doing this? This should be what's going on right now. And just to give you a sample of it, we have a market where everybody in the last handful of years, unless we're talking 2022,
Right.
have interest rates that are, give or take, about 3%. And if you've got a home right now with equity and one of these low rate interests, your biggest selling power isn't your home and your granite countertops and the fact that your lawn is mowed perfectly.
Right.
That helps. But your biggest selling power is your interest rate. And I'm not saying give your interest rate away. I'm actually saying let's find something that makes your home attractive. Could we market a home at a 5-point-something% interest rate? And would that appeal to buyers that are sitting on the sidelines right now? And all of a sudden they see this ad of your home pop up with all those amazing pictures, and it says interest rate as low as 5.5%. Yeah, you gotta have some skin in the game. I'm not looking for somebody with 5% down or 10% down or 4% down.
Right.
I want somebody with a large amount of money down, because me as a seller, I want money. That could be capital, that could be something to use towards another transaction, that could be investment funds. But on top of that, I want safety. I don't want to take over somebody's headache. I don't want to put somebody in my home that struggles to make monthly payments. I want to put this on coast mode and just be a bank having money roll in on a monthly basis. And that's what we're going to dissect and unpack tomorrow. How to do that appropriately,
Right.
how to make it work, and how to do it safe. So
Right.
I'm super excited about going over that. So Mike, thanks for...
Hey, thanks for having me. I really appreciate it.
Yeah.
You know, let me just end with this one last thing I want to say, and that's that when you do things because you really are just trying to help people, you're trying to make it so that the world is a better place. The good things come from that, and that's where we're coming from here. Is yes, we like to make money. Everybody likes making money, but that can't be everything in this world, right? And the more people that we can put into homes, I think the better. The better that the whole country is, the planet's going to be, right? And our community. And so, thanks for having me on. I hope this can reach some ears. Somebody can get knocked through the screen here and just get you to listen to this, because I'm telling you, creative real estate is a way for you to sell your house faster, and for the price you want, and then it's also a way for people to buy a home without having to break the bank, without having a mortgage payment that's double.
Yeah. Create win-win situations, think outside the box, make things happen. And for us as realtors and lenders, make money while helping people get into a better situation.
Yeah.
It's phenomenal. I actually get people asking me this all the time that says, hey, you had a lender on the show, Dustin. Like, a lender makes money writing new loans.
Right.
How is a lender going to benefit from assumptions and creative real estate? And we'll talk about that a little bit tomorrow, because having a lender as an intricate part of this situation is key. If I've got a buyer that's going to buy creatively and they need to refinance in the next 3, 4, 5 years, I need to have a credit partner, a lender partner that can make sure that that person is set up for success. I'm not a big fan of making a commission off of somebody, putting them in a house to watch them simply fail in 3, 4, or 5 years. I want to make sure that we put them in a position to succeed. And again, we'll unpack that a little bit on the next episode. So guys, thanks for visiting. Thanks for coming and watching. Hopefully you learned something from this. Again, I'm Dustin Zeller with the Creative Real Estate team here in Utah. And thanks for tuning in. If you see us on Facebook or Instagram or YouTube, you can find us at Utah Creative Real Estate. Please share this. Please like this. Please subscribe. Please do whatever this method you're seeing us on is asking you to do, and spread the word.